Good morning, folks. It's Harry Swaminathan. Yesterday, I closed out the SPX trade. I had to send out an email because the market was moving quite fast, and that was because the SPX fell to about 1545. We can see that it's come up now, and the futures are up today. So I decided to take advantage of that. I don't know if any of you had the SPX straddle on. You may have had a SPY straddle. But the previous 2 days, we were having a issue with why the SPX was not showing a bigger profit because volatility had jumped up. And even now, and one of the things I'm unable to do is on my paper money account, there's no way, I'm clicking on this, but there's no way to go back. These things are grayed out. I don't know if all your accounts is also showing that, but unfortunately on Thinkorswim looks like they've turned this feature off. You can't go back and look at the transactions from a previous day. Regardless, let me just explain what happened. So on the SPX, the Vega effect started kicking in, and it was high time because it should have kicked in the previous day itself when volatility increased by almost 2 points, and we didn't see that kind of an effect on the option prices. But yesterday we saw some of it, and of course the VIX is now at 14.3. I think we sold it when the VIX was at 14. So we picked up this straddle when the VIX was around 11.6, maybe 11.7. and we sold it at 14. So that's a great move because it's the SPX, and it's a big index, and so even 1 or 2 percentage points move in the VIX is going to show a good profit on your trade. So that's what we did. We picked up almost $4,700 on my 10 contract position on that trade. Now, today, what I'm looking at is the eBay calendar, and let's bring up eBay and see what's going on here. Okay, so eBay is trading at $51, but you can see that the pre-market is going to show an increase. So the eBay position is a calendar, and we put the calendar at the 50 strike price. You can see that here. It's a 50 call, and in general, let's take a look. Actually, let's take a look at the risk profile. And this is what it is. So whenever you have a calendar, you're going to have a tent pole, and that tent pole is where your strike price is. And so you can see we are here now, but eBay is starting to move towards one of these break-even points. Today, right now, I mean, yesterday's closing price is 51.2, but today it's likely to open somewhere here. If that's the case, then what we want to do to a calendar is we want to adjust it, because you don't want to let this go too far. Right now, our tent pole is at 50, and the way you adjust a calendar is you actually do a very visual adjustment. So this is, this is one trade where you have to look at the graph and decide how you want to adjust it. So the best way to adjust a calendar is to make it into a double calendar. So if you look at it, we have a tent pole, and what we're going to do now with this calendar is to create a second tent pole, either at the 52 strike price right here or at the 53 strike price. You're probably going to have to pay a little bit more for the 53, but let's take a look at what this adjustment looks like, and this is how in general you would adjust a calendar. It's actually a very nice adjustment. Now you are going to increase your margin, but bear in mind this thing had a margin of $500, and you're probably going to double that. So let's see what we mean. So I'm going to try to put a calendar at the 52 strike price now. So if we go to our options here, and if we look at, let's say we wanted to, there is no 52, there is 52.5, which is fine, which may actually work better. It's right in the middle of 52 and 53. So let's buy the calendar, and we're going to pay 59-cent debit. So we're going to pay $590 additional for this trade. All right, so we would have a second calendar at the 52. We're going to sell the April and we're going to buy the May. And you keep the contracts the same as 10 contracts. So let's see what this does to our risk profile. See, now this is a beautiful risk graph. The stock is exactly in the center, and now you've converted your one tent pole into two tent poles. So look how much room you've given to for the calendar to play out. Now it's beautiful. So it comes all the way up to 55.2. Most importantly, if you just had one tent pole, then the slope is very steep, or of your profit graph. Whereas here now you can see that your max profit zone has increased quite a bit, and also you're going to increase your area for area under the curve. That's going to represent your profit area, and you've increased that by quite a lot. So this is a great adjustment, and if eBay moves towards the 52 mark today, you'll probably pay a little bit more. So you're looking at about maybe 63, 64 cents, which is still perfectly fine. But this is a great adjustment, and this is how you would, in general, adjust a calendar. So in a calendar, your first adjustment point for a calendar should always be to turn it into a double calendar. But you never want to put the double calendar all at one time. So, and the reason should be pretty obvious, because let's take off this other calendar, because we put the calendar, at the money when eBay was at 15. And why would you put a double calendar? Because you don't know which way eBay is going to go. eBay could have certainly gone down, just like it's gone up. So you would wait for the move to happen, and if eBay had gone down, perhaps we'd be putting the second calendar at the 48 strike price rather than the 52.5. So that's how, because that's an automatic adjustment for the calendar. And by doing that kind of an adjustment, you're giving yourself so much more room to profit. You are, of course, going to double your margin. However, look what it does to your profit. It's got a max profit of about 1,400 on one side and about almost 1,500 on the other side. But most importantly, now you're giving your trade a lot more room. This is the kind of adjustment that we could have done last week on the spiders, but I did not have time to look at the market, and I was on a plane, so we didn't get this opportunity to do that. But the first adjustment to a calendar is always to turn it into a double calendar. So this trade looks good. I'm going to put it this morning when eBay opens. If eBay continues to move up, that's the only time I'm going to put this calendar. If eBay, for any reason, starts to go down, then we don't need to put it right now. So we can just stick with our single calendar and see how it goes. Thanks, guys. Speak soon.